friends from the media. It is my pleasure to welcome you all to this press conference as we announce Bandhan Bank's Q3 financial results. We are delighted to have members of the media, the top management team on the dais, and the leadership team of the bank who joins us, who will share about the businesses. Most of you would have got the press release by now, and you would have gone through the headline numbers, and our leadership will and the top management team will provide you an in-depth look at our financial results, strategic initiatives, and the outlook forward. At the center, we are honored to have Mr. Parthapratim Sen Gupta, MD and CEO, who will be leading today's press conference. On his right is Mr. Ratan Kesh, our Executive Director and Chief Operating Officer. To the left of Mr. Sen Gupta is Mr. Rajinder Kumar Babbar, our Executive Director and Chief Business Officer. And on the extreme left is Mr. Rajiv Mantri, Chief Financial Officer of the bank. MD sir will take you to the financial highlights, followed by a Q&A session. But before we begin, a small request for all of us to keep your mobile on the silent. When we begin the Q&A, as always, a request to please announce your name and for the benefit of a large audience, and then we can start. Over to you, MD sir, if you can give the initial remarks.
Thank you, Ritesh. Good evening, everyone, and thank you for joining us today. On behalf of Bandhan Bank, I am pleased to extend a very warm welcome to all participants on our earnings call for the third quarter of financial year 25-26. I hope you and your families had a wonderful start to the new year, and I wish you continued good health, prosperity, and success in the months ahead. This quarter was marked by strengthening across our core businesses. In line with our strategic focus on quality growth, we saw steady momentum in advances, improvement in the EB book, or more popularly known as microfinance book, and further strengthening of the secured book. On the liability side, our continued push towards granularity resulted in stronger retail mobilization and a calibrated reduction in high-cost bulk deposits. Margins improved sequentially as the cost of funds eased and asset quality trends moved in the right direction with lower stress formation and reduced NPAs. While these are positive outcomes, we remain sharply focused on accelerating CASA and improving asset quality further. I now move to the performance of Bandhan Bank for Q3 FY26 and the 9-month FY26. The quarter demonstrated several underlying strengths across our core businesses. Our advances continued to show healthy momentum, with underlying growth remaining strong even after accounting for the recent NPA sale to the ARCs. The microfinance or the EB portfolio has stabilized, reversing the earlier trend of degrowth, and our secured book continues to strengthen, improving the secured mix further. On the liability side, deposits granularity improved meaningfully, supported by strong retail deposit mobilization, even as we deliberately pared down high-cost bulk deposits to improve the quality of our liability profile. Margins also showed an encouraging upward turn, aided by a sustained reduction in the cost of funds and improving the deposit mix. Asset quality trends were constructive, with lower slippages quarter on quarter, better early-stage indicators, and an improved NPAs following the ARC sale. In terms of areas we are sharpening further, CASA growth remains soft industry-wide, but we are intensifying our efforts to strengthen customer engagement and enhance product propositions. Operating expenses remain well managed and broadly in line with our guidance, despite certain regulatory-driven one-offs, and while slippages have improved, we continue to remain focused on further strengthening recoveries, reducing incremental stress, and moving steadily towards our medium-term credit cost aspirations. Overall, the quarter demonstrates improving fundamentals and continued balance sheet resilience. As of 31st December 2025, our gross advances stood at about 1.45 lakh crore, reflecting healthy growth of 10% year-on-year. On the liability side, deposits reached 1.57 lakh crore, growing faster than advances on year-to-year basis, a reflection of our strategic focus on maintaining a balanced and sustainable franchise. Retail term deposits continued their strong momentum, growing by over 36% year-on-year, underscoring the increasing trust of our customers and the strength of branch network. CASA now stands at 27% of total deposits, and the overall retail mix, including CASA and retail term deposits, improved further to 72%, signaling continued strengthening of deposit granularity and stability. Aligned with our diversification agenda, our secured book at 57% of overall advances continued to gain share within the portfolio, supported by steady growth across secured products. This shift reinforces the improving risk profile and balance within our advance mix. Our NIM for the quarter at 5.9% remained healthy, showing sequential improvement as the benefit of lower cost of funds flowed through. For the 9-month period as well, NIMs remained largely stable at 6%. Gross and net NPAs, they improved significantly at 3.3% and 1% respectively, while our PCR, inclusive of technical write-offs, improved slightly to 84.3%. For Q3 financial year 26, our net total income stood at 3,379 crore, while operating profit was 1,445 crore. The bank reported a PAT of rupees 206 crore for the quarter. This is a significant improvement from the earlier quarter where we reported 112 crores as PAT. For 9-month financial year 26, ROA and ROE stood at 0.5% and 4% respectively. Our capital position remains robust, including 9-month financial year 26 profit. The capital adequacy ratio stands at 17.8% and Tier 1 capital at 17%, providing ample headroom to support future growth. We also continue to expand our distribution footprint, taking the branch network to 1,831 branches, with 20 new branches added during the quarter, and 57 of the housing financial centers were converted into full-fledged banking branches. This expansion enhances our reach and strengthens our stability to serve customers more efficiently. Let me now take a moment to highlight two significant developments during the quarter. The first relates to the portfolio sale of NPAs and return of accounts to ARCs, and the second pertains to the impact of the newly notified labor codes. As part of our ongoing effort to strengthen the balance sheet, we executed the sale of NPAs and return of accounts of unsecured EEB and ABG portfolio to ARCs during the quarter. These are mostly the microfinance portfolio and the unsecured loans. We sold 3,707 crore of written off portfolio, which was realized at a valuation of roughly 9%. Out of the total security receipts issued for this portfolio, our share stood at about 62%. On the cash side, we received rupees 126 crore, and this inflow has been recorded as under other income. In addition to this, we also sold 3,165 crores of NPAs, unsecured loan in the EB and ABG book at a valuation of around 18%. Our share of SRs for this pool was approximately 47%. The transaction generated rupees 303 crores of cash for the bank, and this has been used to offset our provisions under the provisions line item in the profit and loss account. Together, these actions reflect our continued focus on strengthening the balance sheet while ensuring disciplined resolution of stressed assets. The second key development relates to the new labor codes. On 21st November 2025, the Government of India formally notified the 4 labor codes. The bank has undertaken a detailed assessment of their impact wherever applicable, particularly with respect to the revised definition of wages. As a result of this assessment, we have created an incremental provision of rupees 120 crore towards gratuity during the quarter. To conclude, this has been a quarter of steady progress and strengthening fundamentals for Bandhan Bank. We continue to execute with discipline across all strategic priorities, driving quality growth, deepening our retail franchise, enhancing our digital capabilities, and reinforcing our risk and control frameworks. While there is more work ahead, the trajectory is encouraging, and we remain fully committed to building a stronger, more resilient, and more diversified bank. I would like to thank our customers, employees, shareholders, and all stakeholders for their continued trust and support. Thank you.
Thank you, sir, for that informative beginning. We can now take to Q&A. I request everybody, whoever wants to ask the question, can please raise the hand, introduce himself or herself, and then followed by a question that will benefit the larger audience. If anybody has a question. Yeah. So light come kar dijiye.
Hello. Sir, this is Pinak from the Telegraph newspaper. If I see the year-on-year numbers, the profitability is down by 37.9%. I think so. Yeah. 37.9%. Net interest income has also declined. Overall, seems a very soft quarter in terms of numbers. The second question is an explanation for this, and the second question is around deposits, CASA specifically.
Yeah.
Is the bank facing any difficulty in raising CASA?
So let me first answer you the first part of your question. So last year, December, the profit of the bank, I would say whatever you have seen, is also due to the fact that we have received almost 535 crores from the credit trust, the CGFMU amount, which is nil during this period for the quarter. There were also some one-off expenses. So if we can adjust those one-off receipt and one-off expenses, the actual profit last year was around to the tune of 130 crores. So this year, I think, if you can look at it, we have come to 206 crores. And not only that, so you see the impact of the microfinance segment, which was all of us were seeing that the industry was showing a declining trend. New advances were not going, NPAs were escalating. So there was a sequential drop. And in the Q2, if you have seen that we have really faced a very hard, the balance sheet profit has also, I think it is one of the third lowest in the bank's history at only 112 crores. So compared to 112 crores, the sequential increase is 206 crores, which is almost 90% of what we have achieved in Q1Q. So sequentially, we have gone better. Year-on-year basis, the main thing is that last year we were fortunate, we got the CGFMU funds. And for that reasons, we have also been able to adjust some one-off expenses also. So there also, if we can take out both, so the profit was 129 or 130, and now we are at 206. So the bank from today onwards, I can say that it is gradually moving forward. This is the first part of the thing. The second question,
I think
the CASA.
Other income, sir.
The other income regarding the...
So other income, maybe I can explain. So the same point, the CGFMU income of about 538 crores, and then we had Assam government also, we got some money of 52. So overall about 590 crores of one-offs were there in the last year, other income. If you normalize for that, we actually have a 30% positive growth in this time.
Correct. And regarding the savings bank, CASA, while we fully agree that we are concerned that our CASA should also increase. Of course, in the entire banking industry, as we know that the CASA is not increasing because the householder tendency to deploy funds have also shifted to other areas like in mutual funds, stocks, etc. So that has definitely affected the CASA. But here also 2 points you have to look into it. The earlier we were completely an outlier in respect of the interest rates on deposits. So we were almost giving 100, 150 basis point more than the industry, and which led to a lot of questions. Even the good depositors began to ask that why are you giving so high for that? And this has impacted our profits also. So we did the first moderation in May 24 for that year, the impact is gradually coming down. So there were many chunky deposits in our SA segment from many institutional investors. So that part of the deposits has degrown. It has degrown almost by 18,000 crores. But the plus point is that the real savings bank account holders, for that matter, we have grown there by 14,000 crores. That means who are the retail customers. And this has resulted in increase of our retail deposit share to 72%. A year ago, we were around 68%. Today, we have increased our retail portfolio share to 72%. But having said so, we are still focusing much on the CASA. We expect to see a better growth in the next quarter or in this quarter.
So we'll just get the mic to you, sir.
Out of 206 net profit, how much has come from your lending business and how much has come from your treasury profit? And is there any addition of what you have written off? You have said that you have got some money after written off because written off money directly goes to the profit. What are the three components?
Yeah, so treasury income is 25 crores during the quarter.
Profit.
Yeah, 25 crores. So, so the rest all have come from the normal banking operations. So balance 181 crores. And to tell you the return of recovery, what is
So
there?
25 crores is at a PBT level. So at PAT level will be 75% of 25 crores, right? Treasury income.
So around 20 crores
20 crores roughly.
20 crores.
And
from the write-off.
Out of
Yeah.
206, that means 45 crores for
25 crores has come from, return
Sir,
of 25 crores from treasury, 20
no, no.
crores
So
from...
if I can clarify, 25 crores is the treasury income.
Yeah, but that is also netted.
Yeah, at the PAT level it will be 20 crores because you take tax away, right? So out of 206 crores, roughly 20 crores you can say is treasury income.
20 crores is treasury income, 20 crores is write-off recovery, and balance is from the normal banking.
treasury is 20 crores.
No, 25 crores is the income they have received, but after giving the tax effect, it will be 20 crores.
20 crores. And 20 crores from write-off.
Write-off also, we have received 25 crores, so after giving the tax effect, it will be 20 crores.
Rest of this 206 from your...
Normal banking operations.
Thank you.
Yeah, all of you have a question. We are hearing a lot of talk about the fact that Indian banking system
Just,
is resilient.
Can't see who is there.
So if you can just raise your hand.
Yeah, hi.
Yeah.
Sorry. Okay, yeah, I am Anag. I write for Business Today and a few other publications. So my question is, we're hearing a lot of things about the fact that Indian banking is resilient against, the challenges of like trade tariffs, geopolitical tensions, and trade disruptions, all these things, which are making headlines every day. So what do you mean by resilient? And what do you think is the effect that, Bandhan Bank is kind of facing and dealing with because of what's happening across the globe?
So let me tell you a clear picture that Bandhan Bank, as of now, does not have that many foreign assets in our books. So we are, as of now, we are insulated against whatever is happening in the in the external world, and especially in the Trump fiasco that we are seeing around in USA. So that way, we are protected because our assets are mostly localized. It is almost localized for the day. I don't have even, I think, 0.2% or 0.3% of my assets in foreign assets for the day. We have got some NRI deposits, but that too also not substantial, but that is more or less protected because these are all by our domestic people only for that year who have become NRIs. So in that way we are insulated. But if you tell about the banking challenges in front of the banking challenges, those who are actually, I would say, engaged in exporting goods, especially the pharma, the gems and jewelry and others to the USA and other fronts for that year. Already government has come out with various schemes and probably also will give some more leeway to the corporates to fight up the cases. But the thing is that our exports, if you look at it, that our exports is not declining in that rate for that year. So we are finding out other emerging markets also.
Hello, this is Kaushik from Times Bangla. The thing is that just a few... hello.
Can you raise your hand?
Yes. This is Kaushik from Times Bangla. The thing is that, as you said, that there is a big impact on CASA, basically. not only in Bandhan Bank, but on the other banks also. So do you think that this is the time that it need to be re-evaluated CASA guidelines, especially at this time where transaction is like most of the transactions are digital transaction era. So do you think there is a need of re-evaluation of the CASA guideline?
So practically there is no guideline from Reserve Bank of India that how much CASA you should maintain. Banks like to maintain CASA because of the lower cost of funds. This is the main reason. But today, if you just see, there are two things. One is that the government of India, although Reserve Bank of India has reduced the repo rates, but the government of India has not reduced their small savings rate. So definitely, I would say that post offices are in an advantageous position compared to the banks. I am talking about all the banks for that year, because repo rate has been decreased, but the increase in the rates in the post offices have been kept the same, the small savings rate. This is the first factor for that. Number two, if you can look at it, the householders now also, they are also finding different avenues to actually invest funds. So earlier it was only bank fixed deposits, or bank CASA you can say for them. But now most of them, they make their financial planning in a very rightful manner, and to whatever extent liquidity is needed, they keep it in the CASA. And the balance amount are invested into various other options also available, like the mutual funds, stocks, etc. So there are other avenues also. And third is that if you look at the economy, the Indian household has become a net consumer from a net savior. So 10, 12 years back, Indian household was a net savior. They used to save deposits, but now they are consuming more, they are spending more also for that. And if you look from the corporate side also, now the various cash management programs are also available with the banks. So the corporates also do not keep idle cash in their current accounts. So they also, even for a 1 day, 2 day also, they are also investing in the liquid mutual funds or liquid other avenues wherever they are finding. So definitely it is having an impact on the CASA. So question is that how much CASA would be maintained is entirely depending on the business model of the various banks they adopt. I have got a better leverage in the sense that I have still got almost 35% of my book as microfinance, which is the EEB book, where the interest rate is a fixed rate of interest and the yield is comparatively higher for that year. So with this 28% CASA for that year, I'm still able to manage the funds and also making profits. But definitely our effort should be there to increase it at a high. We are not given any guidance in this regard, but definitely we want that this CASA should increase in this quarter or in the coming quarters.
Thank you, sir.
And you are absolutely right that this CASA can be increased with the efficiency in the digital phase, that how much efficient is your digital banking. So let me tell you, we have already come up with a revamped corporate internet banking, and many features have been added, and the feedback received from the corporates have been very encouraging. This month, end of this month, we are going to roll out our revamped retail mobile banking app. So this will also have very unique features. So these developments are already in place, and already we have developed a new account opening journey with SignG, what we are calling for that. And through this, seamlessly accounts can be opened in Bandhan Bank. So there are many steps taken in this regard, and so that the customers of Bandhan Bank also do get a digital comfort, both from the perspective of convenience and also from the perspective of security.
Sir, Mike.
The third quarter, what is the recovery, total recovery, including that return of amount that we have got, plus, and what is the slippage in the third quarter?
Yeah, so I can give you the total figure exactly.
Maybe I'll cover that. So if you look at the slippages for the quarter,
942 crores.
no,
Recovery has been made, apart from the write-off, what we have said, sorry, not 942, 1314.
1314.
Sorry, 1314 is our total slippages, and recoveries almost close to 400 crores, I think.
351.
351 plus
351 is the recoveries.
Plus right of recovery.
So the net slippages is 963 during the quarter. This is only the recovery which is in the NPA line. There is also recovery from written off accounts that goes into other income. Yeah, that is the 25 crores.
25 crores, net after tax is 20. Effect is 20, but recovered is 25 crores. Yeah, 351, sorry, 351 plus 25.
Yeah.
375 crores is the recovery, 1314 is the slippage, net is 963. Yeah, and this is improved. So why you are saying that there is an improvement? If you look in the earlier quarters, so in Q1 we had 1,234 crores of net addition, and the slippages was 1,553 crores. In the Q2 the slippages was 1,590 crores, and now Q3 it has come down drastically to 1,314 crores. So there is an improvement of 280 crores.
Sir, if you can, sir, request if you can take the mic because
In the last 9 months, total slippages and total recovery koto?
Last 9 months. So we have got the idea, total you have got?
Of this fiscal.
I'm coming to that. So if you can add
we'll
17.
give you the added numbers.
1553, 1590 and 1314. These three need to be added for the total slippages. 1553, 1590 and 1314. And the recovery is 319 plus 332 plus 351 plus also write-off recovery is kitna hoga total almost?
Write-off recovery was basically 21 crores in this quarter and 27 crores in the previous quarter. I
And
don't
Q1
have
is-
readily the first quarter number, but I think would be in similar range.
Something around that only, 19 to 21 crores.
So you can assume about 70 crores roughly in the 9 months.
Write-off.
Yeah, write-off recovery.
Do we have any more questions? Yeah.
Sir, the profitability bit I understood because of the one-off kind of thing, but your net interest income has also declined on a year-on-year basis. I mean,
Yeah.
mostly on account of
Just 1 minute.
Net interest income.
Net interest.
net interest income.
So net interest income is the factor of, I am telling you, two things. Basically two things. The first one is definitely the repo cut. So you know that 75 basis point repo cut was almost upfronted, which we need to pass it on. So that is having an impact of almost 300 crores. Number two, if you look at our balance sheet, 1 year back, we were almost, our secured book was 45-48% for the day. And the most 52% was unsecured, having a higher rate of interest. But since, again, I have told you that the microfinance segment was not behaving that well and there were huge number of NPAs. So as a strategic plan, we decided to improve our secured books and reduce on the unsecured position. So that thing has now reversed. So as on date, I am having 57% secured books, which is 10 basis point higher, rather 10 percentage points higher than what was a year ago. A year ago, it was 48%. It has now become 57% for the day. And the unsecured books has come down. So this has an impact. But this has improved the quality. That's what I can say for them.
There's a question from Atmani.
Hello, Atodip from Economic Times.
Yeah.
I would like to ask you the overall stress in your book. What is the position now? And what is your plan to manage this stress? Whether there is a plan for further write-off and further sale of NPAs? That is number one. I have few more questions. You answer this, I'll ask if you give opportunity.
So again, a good thing I can say you that while my NPA book has reduced drastically from 5% a quarter ago to 3.3% today, gross NPA, and the net NPA has come down from 1.3% to 1%. It is less than 1%. My DPD book, which is the major concern, has also reduced from 4.5% to 4.2% quarter on quarter. So there is a substantial improvement even in quantum wise, I can say that I can see a 300 crores, almost close to 270, 80 crores net improvement in the DPD book. So that is a very good signal. My SMA 0 book has come down by 400 crores, and also my SMA 2 book has come down by 25 crores for that year. A little bit increase is there seen in the SMA 1 book, which we are working, and we hope that a majority of them can be arrested and will not fall back. So if I look today at the situation of my future earnings, what will come in this quarter and in the coming quarters, I am in a much healthier position, because one point, if you look at it, my advances, I have sold almost 3,212 crores. Yet I have grown by more than 5,000 crores during the quarter, and almost 10% Y on Y. So if I add back for that year, I have actually grown by 8,000 crores for that year. My book would have grown if I had not sold it. So these 3,000 crores, which was not giving me any interest income, today I have been able to convert them into standard assets. So this will be the additional income coming in the coming quarters in my books. So the stress, I would say it is coming down, but again, we are very cautious. We want to reduce the stress further down, especially the DPD book, and we would prevent the slippages. The slippages has also come down during the quarter, as I've told you, by almost from 1,118 crores to 1,590 crores to 1,304, so 280 crores. So if this tendency goes on for that year, so I think within 1-2 years, we will have a very healthy book. My stress concern will definitely come out.
What is the DPD in absolute terms?
DPD in absolute terms is 6,000 crores.
6051.
6,051.
6,051 crores.
6,051.
Out of this, the SMA 0 is 2,740, which has been coming down. And the remainder is the SMA 1 and 2.
Okay, I have a few more queries. You mentioned about treasury income this quarter, 20 crore. What
25.
was it? 25, and in net basis 20 crore. And what was it in the quarter 3 in the previous fiscal?
So Q3 treasury income, I don't think we had much income only in Q1.
Q3 last year was 27 crores.
27 crores. So 27, so it has come to 25. So more or less the same.
More or less.
So treasury also, we have taken a conscious call, because you see one interesting event that has happened, that despite the repo cut was announced and everyone was expecting a reduction in the GSEC rate, it has rather taken an opposite direction. It has gone up for that. So actually most of the banks, and including us also, were making some M2M losses. So in order to cover it, we decided to sell up the securities also and contain the loss.
Related to my first query, were there any plan to sell or...
So this is an ongoing process. I can't right now tell regarding this, but definitely it is one of our strategies to manage the NPS.
Another query is, how much of your portfolio is covered by credit guarantee as of now?
No, we are not, for the last 1-2 years, we are not taking any guarantee cover. But now we have decided that we will take some guarantee cover in some of the portfolios. We have not finalized yet, but as of now, there is no guarantee cover.
Thank you.
Vivek Chaudhary.
Sir, एक second. Sir, please.
Just a second. 1 minute.
Sir, Sagar sir.
You told that you have sold NPA of 3,000 something crores. Out of by selling, how much money you got?
So we have given that, in my speech also I have told for that year. So the total cash in one of the NPAs, we have received a cash of 323 crores and balance in the SRs. So total value was how much SR? 600?
So we sold NPA of 3,165 crores, and the net cash that we got was 303 crores, 303. The value of this was roughly around 578 crores, but there was a portion that we invested and there's a portion that we got from the ARC. The money that we got from the ARC was 303 crores.
So that is 53%, and we have invested only 47%. Normally, the ARCs invest less and the bank invests more.
Good evening to you all. This is Vivek Chaudhary from Ajkal newspaper. My question is rather very general one, generic one on the banking scenario at the moment. In terms of investment, today's youngsters are veered more towards mutual fund and share market. And as a result, this is proving to be, I think, sort of a drag on the bank deposits. And also as a resultant effect, the cost of fund is also coming under stress. So how do you foresee the future? How you are going to grapple with this?
So, as I've told you that this is the trend. And just now also I've told that people are looking for alternate avenues to save their money. And many of them are investing in trade and so the banking model of doing the business will also change, and we are also changing ourselves. The first thing is that we are coming with, very soon we'll be coming with a 3-in-1 account, whereby a savings bank account along with the demat and the trading account will be opened. So whatever the tradings they are making in the mutual fund stock exchanges, our customers, they would be doing through our demat, and it will be doing through our trading accounts. So if these are done for that year, the money remains in the banking system. Of course, time and again it will go out of the system and again come back to the system. So this is one model, I would say, the change in the business model. Number two is that all banks have now becoming very strong in the payment system, if you can look at it. And we are also evolving in this payment stage for that year. So all these payment upfronts like onboarding of merchants and then doing the transactions through our based on a commission fee, the increasing in the non-fund business like bank guarantee, LCs, and other sorts of other income which are related to the banking affairs. We are also strengthening these platforms. So going forward, maybe that other income would play an important role in getting the revenue of the bank.
So, any plan to open more branches in the fourth quarter?
We have some. Yes, definitely. I think 30th, this 30th only I am opening 10 more branches.
10 more.
January.
Already you have opened 800 something new branches.
Not 800 during the current year. No. It is 100. Kitna hua current year mein?
I think compared to the last year, it's about 70 branches, 70.
So we have converted 57 housing finance centers as full-fledged branches.
Achha,
So those branches, those housing finance centers have been converted as full-fledged branches. So
and 70 new branches have been opened.
70.
70.
70.
Housing finance, that means the company you acquired.
Group.
Yeah.
Have acquired.
Group, yeah. Yeah, please, ma'am.
Sir, what is the mystery behind you are growing day by day? There are so many companies. There is a lot of competition, but you are growing.
No, so you see, the first of all is that we have to grow because this is a young bank. We are just 10 years old. And definitely we have come from an area where we have served the poorest of the poor. So we have evolved from as a microfinance institution to a universal bank. And there are a lot of expectations from our customers. So initially we were concentrating on the microfinance customers, but now we are gradually evolving and going to the HNIs, the high net worth individuals, and also the corporate customers. So now we are planning for a very secular growth across all segments. If you look at my liability sides also, we have got products for the affluent sectors like Elite, Elite Plus, Legacy, and many other. We are starting with a new corporate salary package. So definitely we are also looking for the new gen customers to our bank. So our aim is that, yes, to sustain in this banking business, we need to grow and grow with quality business.
May I ask another one? This is Atodip. You mentioned about DPD 6,000 crore. How much of it is contributed by the microfinance business?
So microfinance DPD is 2,310 crores.
Yeah. 2310.
2310.
And rest is contributed by which segment?
Yeah. So 2310 out of 6327, 2310 is microfinance.
So another 3,000.
I think a large part of that is housing, which is there about 2,670, and the remainder is the others, which is there. But whilst housing has a high DPD, it doesn't translate into a high NPA. I think we do get collections immediately
So
after that.
housing, what happens, the DPD becomes because, you see, we have a EMI collection date. So that normally does not match with the exact salary date or exact date on which it comes for the day. So there may be a delay of 1, 2 days, 3 days, 4 days, the DPD, it is it comes as SMS 0 and it goes up. So some of them, even for the, especially the affordable housing group, they have a tendency to pay at the last moment also. So normally, whatever the DPD book, a very small percentage slips. In fact, in December quarter, it was negative. We recovered more than what was slipped. And in the December month, sorry, not quarter.
And in the slippages, 1314, what is the share of microfinance?
Slippages.
Out of 1314,
942.
microfinance is 942. Yeah.
942 crores.
Thank you.
Do we have any further questions? So great. Thank you very much for joining us. Do come to us if there are any further clarifications. We're always there. And I invite everybody to join you for high tea. Thank you very much once again.